Jim here again with Thomas Knight from Waterstone Mortgage. I'm Sherzer Insurance, auto, home, business insurance. We've been here since 1979 locally. We have an office in Cape Coral, Fort Myers also, which you've actually worked with also.
I have, yeah.
Which is great. So really, I mean, I have a partner in Orlando with Numero Uno Insurance. So we really have the state kind of circled,
Right.
you know, and,
Right.
and you kind of the same way with mortgages.
Absolutely.
You know, we can go to Central Florida, we can go to Southwest Florida, we can go over here. You know, I guess I need to open an office in the Panhandle, don't I?
I love the Panhandle.
Yeah.
That'll
So
be
you
a
could do some
reason
work
for
up
us to-
there too.
Well, and
Yeah.
a reason, well, I've done mortgages up there,
Yeah.
but that would be a reason for us to go hang out in the Panhandle.
I'd like. I got family up there too, so that'd be
let's
fun.
do it.
Yeah, that'd be good. So, really here today, Thomas, you know, calls me here and there, and he's pretty knowledgeable about insurance. I told him this mortgage thing doesn't work out, he might go into the insurance business with me. But anyways, some of the questions that you get and about insurance, and you kind of hear, and maybe I could help clear some of that up.
And I do get questions because, you know, in the loan application, not the application process, but once we get a contract in on a home and we start processing it, one of the most important things is insurance and why that's so important. And, you know, I get different questions, and I do know the answers most of the time, but if I don't, I call Sherzer. And let me just tell you, by the way,
He doesn't even call Sherzer, he calls me directly.
I call Jim, yeah, because I have his cell phone number. So, but because I know
And you can call me at 9 o'clock and I'll
I
answer.
can, yeah.
Yeah.
And
Not for everybody else
yeah,
though,
yeah,
but,
I have.
but yes.
Like in the
yes.
middle of a hurricane. I've
Yeah,
talked to
yes,
them.
yes.
But I call them and I refer my clients to Sherzer for a couple reasons. Number one, they've been around since '79.
Yeah.
And they're good, they're honest, and I trust them.
You know, and I was just thinking the other night, like my team, and you know, I constantly go out and I see some of these other agencies, and like one agency I won't name, but like their longest employee has been there a year.
Right.
And I'm like, wow. I mean, I'm going on close to 20 years experience. Stephanie in my office has 20 years of experience. Paula in my office has 17, 18 years experience. Mark in my office, 10 or 11. And Emily's going on like 12 years.
Right.
Tyler's got 7 years. Raina's got, I mean, if you add up all our experience,
Hundreds.
you know, and my sister down in South Florida, I mean,
Hundreds of years of experience.
I mean, Marvin Sherzer, who started it, had 28 offices at one time. I mean, the resources and the relationships that we've formed is what's pretty special.
And here's the thing that to me means a lot is I send my clients, my friends, my customers, my borrowers to Sherzer, and my personal insurance is with Sherzer as well.
And I would say, do we write that business every time? Absolutely not. But I would say probably 75% of the time.
Right.
Because then sometimes we say, hey, and we'll refer them to somewhere else to say this might be a better fit.
And I know that you've done that with mine.
Yeah.
And like that leads me to a question that I get sometimes.
Yeah.
Is like, you know, I'll have someone who'll call and they'll speak to you, and then they pick up a phone and call somebody else that their neighbor's cousin's friend suggested. And there's
Which is fine. I like loyalty.
Sure.
I love that.
But there's a big difference in the quote they get.
Yeah.
Sometimes for the same house. Why
Oh, in the
is
same company or same?
Yeah.
Well, that's funny. Yeah, I've seen that actually quite a few times, and I get phone calls on that quite regularly. And here's the sad thing: when I first got in this business, a regular home where somebody's going to live in is referred to as an HO3, which is a homeowner's 3 policy.
Okay.
And that's a standing policy. And years ago, an HO3, what was in an HO3 was covered across the board. If I wrote you an HO3, it was covered. Well, after, I guess it was Charlie, rates started going really high. Hurricane Charlie, sorry. Things started, if you don't live in Florida, you don't.
Right.
We talk slang down here.
Who's Charlie?
Yeah. Now, Hurricane Charlie, you know, there was a lot of lawsuits, there was a lot of things going on, and then insurance got really high, and they said, well, we're going to give consumers options. So we're going to change, allow companies and agents to change the form, meaning they can add replacement costs, they can take off replacement costs. which again, I'm talking insurance lingo. So the difference between like a replacement cost and a non-replacement cost policy would be.
I was going to get to.
So replacement cost, if we're insuring your house for $260,000, then a replacement cost would be $260,000 on that policy. Okay. Where an actual cash value would be at the time of the loss, they would come in and deem, well, this house is 15 years old, this furniture is this, we're only going to give you X amount of dollars.
Okay.
Big difference. Big difference. One little check box could be something very big.
Okay.
Water loss. Water loss is a big thing. Actually, it's been a hot button policy. A lot of piping in Florida was polybutylene. I think I said that right. I don't know. I'm not a plumber.
I think you did.
But a lot of water losses.
Right.
So, well, you know, you can either have water on a policy, meaning if a pipe breaks and your house gets destroyed, there's coverage for it.
Will you do insurance on polybutylene?
No, it's very tough. I can't say no completely.
Okay.
It's risk by risk.
Okay.
I would say that. Still send it to us. If we can't, we'll get you somewhere that can.
Okay.
But with that is, you can exclude water from a policy, which would be a big difference. So, so it's things like that. Screened enclosures. You know, if they don't put the screened enclosure on the RCE, it's not going to be covered if there's a loss.
What's
like
an
a pool
RCE?
cage. Again, insurance slang. I'm sorry. Replacement cost estimator.
Okay.
We do what's called a replacement cost estimator to come up what we should insure that house for.
Okay.
Okay. That's where we get the value of what we should insure the house for.
So when when they get a quote back and brand X maybe didn't include the pool enclosure and Sherzer did, so that means Scherzer's, the pool enclosure is
Covered.
Yes. And then if, you know, heaven forbid, something happened and there was damage to this pool enclosure, it's not covered.
Correct. And it's funny, Thomas, with that. It's not funny. I shouldn't use the word funny. Well, first of all, that's the difference. We'll answer your first question. The difference is I literally had a lady not too long ago come in, and it was this company and this company. Why is theirs $400 cheaper?
Okay.
And I said, well, you don't have water on this policy, you don't have screen enclosure on this policy, and you don't have replacement costs. Okay. And it was only $400 cheaper. I mean, I know $400 is a lot of money, but when you're talking about hundreds of thousands maybe difference in a claim, that's not a lot of money. Would you want to save $400 and cost yourself $60,000?
Well, a house is, for most people, is the largest investment they're ever going to make in their home.
Absolutely.
And so, if I'm buying a house that's, X number of hundreds of thousands of dollars, I'd say, well, $400. Let's go ahead and
make sure I'm covered.
Right, and don't go to Starbucks, every day.
Correct. So that's the first one. The next one was the replacement cost. Is that what you're kind of going with? So we have what's called after Hurricane Charlie again. Before Hurricane Charlie, never heard of replacement cost estimator. Okay. After Hurricane Charlie, replacement cost estimators become the big deal. And I'm not going to get on all the whys, but it was basically companies got dragged into court saying you were underinsuring properties.
Okay.
And so now, now we got to be held to this. So people come in, and listen, in a rising insurance market, we don't hear many complaints because people are like, hey, we got to insure your house for $300,000. Okay, that's fine. I'm paying $350 for it. Okay. And we don't insure the land. So the land, so you're fine.
It is the replacement cost.
Correct. Okay. So we're fine. Now what happens is 2010, 2011, 2012, properties sunk in Florida.
Yes, they did.
They went way down. And now people are saying, well, why are you insuring my same house for $350 when my house is only worth $250? Well, that's what the real estate market says your house is worth with. Replacement cost, meaning if you had to go hire contractors to rebuild this house
to the same level,
and sometimes even newer because of codes, you need to be insured for this amount. Correct.
And as a lender, you have to.
Yes.
We're not going to say no. I don't want that.
No.
I don't want it to be.
Well, and here's the bad side, and I've never had this with you or any of your team at Waterstone, but there were people that would call us up and try to say, well, only insure this house for this much because they really can't afford it. And I would say, well, then I'm not your agent because I'm going to insure it correctly.
Right.
I had a mortgage person one day tell us, and this person I don't even think's around town anymore.
Yeah, well.
But they said, don't tell her that she needs flood insurance. until like a week before because I think it'll kill the deal. And I said, no. And we called the customer. My agent called the customer, Mark in my office, and he actually said, ma'am, you know you need flood insurance. This is in a flood zone. And she's like, no, I didn't know, but thank you. And that person called my office and said they would never do business with us again, the mortgage person. And I said, well, tell you the truth, I appreciate that. Because we have morals and ethics around this office.
You know, I've known you for years, but I've never heard
No,
that.
it's
my God.
Yeah, I mean,
you know, I gotta sleep at night. You know, life is too.
Thomas, I gotta shop in Publix. I gotta shop here. I eat at Rossi's. I eat at Hannah's. I see you guys out in the community. I see you at my kids' sporting events. We go to the same workout centers with these people.
Right.
Like, I'm not gonna do anything to jeopardize that.
You know, and that leads me to one of the things that's really important, I think, in what I do is, you know, I'll see people I tell people.
Yeah.
They say, what makes you different? I go, well, I'm not sitting in a cubicle in Wisconsin.
Amen.
So what makes y'all different from 1-800 blah, blah,
Same thing, exactly the same thing. And I've spoken at the chamber, I don't know if you've heard me before, but I've said, you know, if your insurance agent's up on the top floor of a building and there's security downstairs and you can't get up to see them, there's probably a reason for that. You know, our agency, we're open Monday through Friday, 9 to 5. We're closed noon to 1 for lunch.
Right.
You don't have to come in my office to buy a policy, but you can.
You can.
And you can walk in that office any day during the week, and we're there.
And I have before I was in the mortgage business.
That's how we actually met.
That's how we met.
You walked right in my office.
Yeah.
So that right alone, Insurance Journal has stats, and they said if you have an agency that's local and that you actually go into them, I believe it's something you're 70% more likely to get a better policy because that agent has to face you.
Okay.
And they live in your community. They do this. And so they're going to be, but and I'll tell you this, actually, here's a little dirty secret. I had a friend that works for a large insurance company, not here locally. Everybody's going to think Brown & Brown, and that's not true. It wasn't them. But they actually went to a model where their producers were in that situation. They were in a cubicle, locked away.
Right.
And the customers could never get back to that salesperson if they tried.
Right.
And you were sent to like a service department. And the reason that the actual leadership team told him was, we don't want our agents to get connected to these people where they have consciences.
Right.
What? Are you kidding me? You run a business like that? That's your business model?
Ethics.
I mean, it's just sad. And that's what's sad. That's what makes me mad. I always say, listen, I don't care if I lose a business to Blake Thomas State Farm.
Sure.
Or Rex Caton over here, Caton and Hosey.
Good guys.
Or, you know, we know the certain guys that are good. And there's a lot. Angel Hall. I mean, I'm not even going to list. The list goes on and on. There's some really good agents. And I've said that in the chamber. Listen, I'd love for you to deal with Jim at Sherzer, but there's some really good agents here in town. And there's a few bad ones. You know, but that's like anything. But buy from a local person. Buy from somebody that is in your community, going to be around, because you're more likely to get a better policy, better service, and just all around better experience.
Just like if one of your insured, one of those people who just walked by, you'd know them.
Yeah.
And you're not going to go, oh my God.
No. Me and my family live here. My kids go to school. My kids swim on swim teams. I mean, we are in the community, and we love this community, by the way.
Absolutely.
I mean, I grew up in South Florida, and it's very nice down there. But I just love it here.
Right.
There's a sense of community here. People know. We're members of the South Daytona Port Orange Chamber, and it's like a family reunion every time I go to one of those meetings.
Well, you know, we have a group that, you know, we meet.
Oh, our chamber group. Yeah, our leads. We have a leads group.
Leads group that we meet every Tuesday for lunch, and I think I've been going there for 6-something years.
Yeah.
And it's like family. Like
it is. I think I've been a member of that group since 2010.
Have you really?
So I think we're going on 13 years now.
Cool.
And it is. And, you know, we've had some people blow into that group and blow out. And, you know, that's all right. But, man, we have such a good core group of people. And, I mean, every week you know, somebody called me for a rental house or a mortgage or life insurance or this and that. And I'm like, yep, here's your guy.
Yeah. And if it's not in the group, we know somebody who does.
Yeah, health insurance. I don't do health. You don't do health insurance. I mean, we've got somebody we send health insurance to. You know.
Hey, I had another question.
Yeah.
Tell me about roofs again. I mean, so what's the age of the roofs? And I know that's kind of you're poking the bear, but
it is. But people need to know why.
Right.
Yeah, everybody's blaming insurance companies right now.
Right.
And I said, well, that baby kind of left once 6 insurance companies went out of business the last 2 years.
Right.
Then you got to kind of look deeper and say, well, wait, what's causing this?
Right.
And it's one thing and one thing unknown. And let me tell you something, why rates are really went up now. You would have seen some increases because of the hurricanes.
Right.
But that's not the driving force. The driving force is the roofing fraud and the one-way attorney fees. And if you've lived in Florida for any time,
right,
and you're going to drive up 95 or down 95, across I-4 and back over, what do you see, Thomas, on every billboard?
And buses.
And buses. You see attorneys.
That's right.
And that's fine. Listen, I
One
think
just went by.
Oh, okay, yeah, there you go. And that guy's everywhere, actually, yeah. Well, I think you all probably know who we're talking about, but we won't say. But listen, I think attorneys, I'm friends with them. We got a lot of friends in the chamber that are attorneys, and they'll even kind of say they will say it's BS, a lot of them, because there's only about 4 or 5 large bad actors in that have really learned a way to kind of manipulate the law. I'm not going to say cheat, because I think they do it within the guidelines of the law, but they're manipulating the law. And they're doing it on such a large scale and ripping roofs off and charging the insurance companies thousands and thousands of dollars. And that's where we're seeing that. But now the Governor DeSantis just did sign some legislation.
We see some changes coming.
Yes, yeah.
Okay.
So but then thousands of lawsuits have gotten fired the last two weeks because they know that this is coming. Blake just said we got 2 minutes, okay? So we'll wrap up. But they know they don't want it to go away, Thomas, because it's very lucrative for the attorneys.
Got to pay for that billboard.
That's not cheap. Yeah. Me and you don't have one of those, do we? Yeah. So, but that's really the reason. So to answer your question, if you have a roof that's 12 years or newer, give us a call. We'll help you. We'll be able to figure out a way for you to get coverage.
Okay.
If your roof's older than that, I really would tell you to probably stay exactly where you're at. Because if you get a new roof or write a new policy with a roof older than that, there's a really good chance that they're going to tell you got to get a new roof on your house. So if you're not prepared to get a new roof, sit where you're at.
Okay. Cool.
And hopefully we see some changes in the next 16 to 24 months.
Well, thanks for answering the questions that I get.
Hey, awesome. This was fun. And, we'll do this. We're going to do a couple more little segments just to try to inform people.
Right. It's
So,
fun.
Thank you.
Thanks. See you.